Like to open the IDA meeting April 3rd. Time is 10:34.
The packet for. Believe we're going to start with the audit committee.
That's not me.
I need a motion in a second to break the meeting. Like a motion in a second to break for the audit meeting.
I'll make a motion.
Second. I'll second. Audit is myself.
Mayor, we have Patricia Brennan from RBT, the auditors for the Hudson Industrial Development Agency, here to make a presentation.
Floor is all yours.
Thank you. Here to present your 2023 Hudson IDA financial statements. I'd like to start with page 1, your auditor's opinion. It is an unmodified opinion. Then if we move on to page 4, this is your management discussion and analysis portion of the financial statements. We do not opine on this MD&A, but it is a good tool to use for discussion purposes because it does provide a comparative from the current year to your prior year. We do make sure that all these numbers are in relation to the financial statements that we do opine on. So the amounts and figures that are represented here are in fact on your financial statement. So further along around on page 6 and 7. But for discussion purposes, I think it's a good tool to use because it is a comparative format. First, starting on page 4, you'll notice there's a summary of your assets, liabilities, and net position. When you compare your current year 2023 to 2022, you see an increase in your current assets along with the current liabilities. There is an increase in there. That is the result of the pilot payments that are due to your city, county, and school district just have not been paid out at that point in time. So that cash will get paid out, offset that liability. Cash will decrease, liability will decrease. So that's what that increase in there. Because you look at the percentage change, you're like, that's significant. But it's just a timing issue because that statement of net position is a period in time. It is as of 12/31/2023. Next on page 5, another good table is this statement, the summary of revenue, expenses, and changes in net position. Again, this is a comparative of your revenues and expenses. So it's a good tool to utilize to see, is there any significant changes from current year to prior year? And you'll notice again, the operating revenues, there is an increase in those operating revenues. That is due to administrative and service fees. In your current pilot, there's one current pilot that has administrative costs that are in that number, in that revenue, along with one other project that has service fees in there. Your expenses are consistent compared to the prior year. If you move on to page 6, this is the statement of net position. We do opine on this statement. These are the same numbers that were just shown on your MD&A on page 5, 4 and 5. This is, again, the same information with the cash that you see is shifting along with your liabilities, that increase in liabilities. Your accounts payable is very comparative, which is anticipated. It is that accrued expense, which are those pilot payments that are due. Move on to page 7, your statement of revenue and expenses again. The significant shift is in other charges and services, and those are administrative and service fees that were collected during the fiscal year of 2023. Page 8 is the statement of cash flow. If you do have any questions on the statement of cash flow, please let me know. It's just a reflection of the different types of activities that occur throughout the year and the ins and outs. That summarize it, it ties it back to your cash account balance. If you move on to page 9, these are the notes to your financial statements. The note I would like to draw your attention to is on page 10, footnote 2, accounts payable and accrued liabilities. Here it does refer to the pilot payments that are increased in those liabilities in 2023. So it is noted to the reader of the financial statements why there is increase in this liability account. Next, on to page 11. This is another information schedule. We do not opine on this schedule. This schedule is a reflection of your current pilot programs and future pilot program projects. The schedule does represent the property taxes that would be collected if there was no pilot project in place and the current payments under the pilot project. Next is your page 12 is your report on compliance and internal controls. On this report of compliance and internal controls, there is.
Can I have a question on page 11? Back on page 11.
Yes.
Real property tax is just a single number. Does that include, that's including school, city and county?
Yes, it does.
Okay,
Yeah.
so there's no way for looking at this to figure out what the impact is on the local, right?
It's about,
It's equivalent. I mean, it's gonna be evenly distributed across all three,
So the
so,
ratios would be the same.
yeah, so if it's 223 versus 193, so that's what, roughly $30,000. So
So
it's roughly,
Okay.
school is 50% of that, county's about 9.
yeah,
And
so
the city's-
basically they run in parallel.
Yeah, it gets split out
Yeah.
based on their overall contribution to the combined tax rate.
Yeah, okay, thank you.
The real property tax exemptions on the top, the designations, Half Moon Terrace, LP. Maybe that was before I joined. Who was it?
That's the terrace apartment.
Okay.
that was done
Okay,
20 years ago.
Yeah, yeah.
and 620, and the, so there's asterisk 620 Hudson LLC, and the ones with asterisks indicate,
Approved applicant,
okay,
project for the construction isn't finalized, it's not completed, so there is no pilot permit to report,
country, road,
but
okay,
the applicant is approved.
thank you.
So we felt the need to include it on the schedule, that way future years, you know. On page 12, your report of internal control, NOVA compliance. There was no items that came to us as a control deficiency that rose to the level of material weakness or significant deficiency in this report. And we did note a compliance finding on page 14 though. The compliance finding is that the annual report for 2022 was not timely filed onto New York State ABO's website. We just noted there was a delay in that filing, and so we just reported here as compliance filing, so it brings it to the board's attention that.
And Lisa, did you have some background on that?
I can't remember the details, but I do know that they kicked it back after we submitted it. And was it finalized in August?
Yes.
Yeah, there was it was initially, if I remember correctly,
We
it
went
was
back and forth
it
with
was
them for a
filed
long time.
originally on time, but there were some significant questions in terms of how a certain amount of pilots should be reported. And they will not send you information in an email, so they refuse, they literally refuse. So it's like you have to wait till you can get hold of somebody on the phone, and between Chris Shaw, the attorney, and Lisa and
And
myself
Jess
and
was in there too.
Jessica, who was the CEDC administrator at the time, we're all on a conference call with the person at least twice to try and get clarification as to how they wanted it recorded. So I believe that was the problem. And I believe we finally got it accepted.
We did.
Yeah, it is accepted. It was just, it reflects that it was not filed timely because.
Yeah, there's no, you can't have no record of the back and forth except in.
Yeah, it doesn't show a history of the first initial submission. It's just the acceptance of.
And this is, I think this is probably the first time that any of us had to
Do the,
provide a new project to Terrace, because the only one that existed before
was the
this one
terrace.
was Terrace, which predated all of us. So,
That concludes the financial statements. If there's any questions, please do let me know. Along with the financial statements, we do issue a report to the board of directors. This is our board report. In this report, there is some key items that I'd like to bring to your attention. One is being the required communication to those charged with governance. In that communication, we noted to the board that there is no new standards being adopted that impacted the Hudson IDA. When there's a new standard, we do flag it to the board because usually there is an impact and you will see those changes on your financial statements that did not occur in fiscal year 2023. Next is Exhibit A. I would like to discuss items noted on page 6. This is our letter discussing compliance and management suggestions. We just discussed the compliance finding with submission of the annual report to the ADO. But management suggestions are not items that raise to a control deficiency. They're not a weakness. They're not significant deficiency. These are just areas that we would suggest to management as areas that improvements could be made to create a better sound controls and processes. First one being financial reports review. We could not identify the treasurer's reports that are prepared monthly. There is no documentation that those reports are being approved by the board of directors. And same with the payment of the bills each month. They recommended that it's being noted in the board minutes. That way there is a confirmation that the board is receiving this information, reviewing the information, and approving it. It just creates a monitoring level that's being documented as a control.
We don't do that on any of our organizations. We provide that information to the finance committee and to the board as a report, but not where they approve it.
Okay.
Because we've already spent the money. So I think that, you know, we do provide that information in the packets. Heather's report goes in the packet, and my feeling has been that if we pay the bills in March and we have the board approve them in April, but they see that it's better that they see and acknowledge what we did, not have the fake approval that we've already spent the money.
Correct. The action occurring prior to the recent payment would be the best.
Yeah,
Then it becomes very
you pay late
difficult.
fees.
Exactly, so that becomes very difficult to achieve. The approval subsequent to the actual payments being dispersed ensures that there is another set of eyes that do review and could catch any potential issues that are occurring and prevent any future.
I just wouldn't want someone who sees these minutes later or watches this recording to think that we don't provide that information. To how often does the finance committee meet? Quarterly, I believe, and to the full board gets the packet. And but I have seen some of these agencies, submit that level of detail. But also, if you signed a contract with CEDC to manage the organization, that's the approval was the date that you signed the contract. It's not something that needs to be approved every month.
Correct.
Could we, I mean, for the purposes of documentation, perhaps we could have at the meeting where the reports are presented, just an item in the agenda that the board accepted the report.
Okay.
And then
Yeah,
you'd
not
have the
approved,
documentation, and that will give you the thing that we looked at it and we'll accept.
And we
it.
do accept, they do vote to accept the treasurer's report every time that we do it, so.
My question is, does it have to go through the finance committee before it comes to the whole committee?
No.
Because there's no reason, and you'll see in the minutes for this meeting, I've got the first 3 bank statements, the bank reconciliations included, as well as the P&L and the balance sheet, and I was planning on doing that going forward. So as long as it doesn't have to detour through the finance committee, there's no reason we can't do that. I don't see any, I think to Patty's point, even though it would be after the fact, there's no reason we couldn't include a list of the vendors that were paid and how much they were paid, because at least at that point, somebody can say,
Why did he get on?
who are these people? I mean, obviously nothing gets paid before the contract gets approved, and we really only have like 4 vendors at any given time, and they're generally already contracted, like Rodenhouse and Shaw. But I mean,
Yeah.
we have had a couple of years where we've had, MLB and a couple other vendors, and of course, they were engaged by the board
In advance.
in advance, but there's no downside to
No.
providing a list if it might.
It's just that you don't want to create a administrative burden that results in you getting late charges, but it's certainly information that can be reported in greater detail than we have in the past.
Yeah, so I'll just add that to the list of the stuff I provide every
Because
month.
now what someone would have to do is if they saw, accounting, $8,000, someone might say, well, who was the accountant? And if we have that data in a backup report, they would know it was your fault.
Right. Next item, this is a repeat suggestion, a disaster recovery plan for the Hudson IDA. It just ensures that in the event of disaster, there would be minimal loss of data. And it doesn't have to be an extensive written policy because I would address it based on the size of the entity.
But I think that we don't have any independent office. So we have our disaster recovery plan that we could provide you for CEC that is provided to us by our consultant that runs our network. And the city, the extent that Heather has the financial data, the city has a disaster recovery policy. So because of the nature of the organization not having maybe we just put that in writing that that's our policy.
Policy is between the two
Yeah.
because
Okay.
accounting records are hosted on one,
Yeah.
administration's on another, and following.
And it's contractually.
So Mike, are you gonna, if you're
I'll just
organization?
I'll write a 2-sentence thing up for you to approve next month.
On page 7, this is just a management representation letter. It's a communication of responsibilities that Input does take in the 2023 financial records. Next, please, my review of the board report. Are there any further questions?
Further questions from the committee members? Any public comment? We need to accept. this report.
Accept this report.
That's for a motion to accept the audit report.
Second. I'm on the other. Sorry if you're not on the. Oh, sorry. I thought we were back in our regular business.
All right.
Then you have the current February financial reports to review and accept.
Any questions about the February financial report?
Thank you, Patty.
I'll
Good
take
to see you.
a motion
Good job.
in a second to accept the financial report.
So moved. I'll second.
Ask for a motion in a second to adjourn the audit committee meeting and return to the regular.
Make a motion. Second.
All in favor? Aye. Great. We are back. All right. Has everyone got a chance to look over the minutes? There's no additions or changes. I'll take a motion in a second to accept.
So moved. Second.
All in favor?
Aye.
Right. Required board compliance.
Can you go back and have the full board accept the audit?
Oh, yes,
Sorry.
yeah. Can I have a motion and a second to accept the audit report?
Make a motion.
I'll second.
All in favor?
Lisa, we have the annual required training for new members. Is that what you had on here?
Yeah, just a reminder for the new board members to take the training. I know you've sent that.
I'm done, yeah.
You're done, that's right.
I'm not,
I know you're
You
not.
sent me a
That's it. I know. I'll remind everybody.
It's rigorous, Margaret.
oh, I'm sure it is.
If it's not.
I just had a very busy March.
The difficulty is it says it's like an hour and a half and it's like 25 minutes.
Yeah.
you know.
Sometimes it depends on who you get.
They took it done 3 times, so.
Did they really?
Yeah.
Wow.
3 times.
All right, I will hand the floor over for the administrative director's report.
Thank you. As you know, the IDA has been working with the Columbia Land Conservancy with respect to property that's owned by the IDA in the North Bay. I'm going to ask Council Chris Shell to update us on those discussions.
Yes, thank you, Michael. So the board had the purchase contract, and the CLC is working with their surveyor to complete a survey so that we can attach that to the purchase contract. One item that came up in that context is that there is an area on the southeast part of the property that is adjacent to 2nd Street that has been used by, it's near a shed that's there, that's been used by the city as a snow storage area. So we've had conversations with CLC and the city about cutting that piece out and doing a lot line adjustment to attach it to the city property so that CLC would not be taking that over. That seems to be, acceptable to the parties and simpler than, doing some kind of cross easement or whatever. So that process will result in coming back to the board probably in the May meeting once we have a map of that area so that we can have a minor modification of the purchase agreement to provide for that divot to come out of the conveyance to CLC and go to the city instead as a lot line adjustment. And the city is, it's permissible to convey property to the city without compensation. So assuming that that's what the board would like to do, they were going to convey this to CLC, but obviously if the city's using it, CLC doesn't want to take it on. So does anybody have any questions about that proposed solution?
You said snow storage?
No storage, right? So the area, if you're west of 2nd Street, but just right there next to 2nd Street, at the bottom of that property, there is an area there that has been used for snow storage. Gets moved from other parts of the city over to there.
Saving the truth.
Maybe not so much this year, I don't know, but in some years.
Yeah.
So just if any of the board, if you have a question about that, let me know. Otherwise, we'll proceed to work with CLC and the city on that.
I think, when we went down there and we saw that there was a shed there, and obviously the Land Conservancy doesn't want to get into being the city's landlord. So I think the obvious solution is to do a lot line adjustment, eliminate it from the property that you're going to give, you're going to convey to the Land Conservancy. And then, Chris, would we convey the other, the parcel that's excluded to the city?
Yeah, so that would be a lot line adjustment. Once it would have to have planning board approval before that is concluded. But yes, ultimately there would be something in the nature of a deed to the city for that small piece. It wouldn't be a separate piece, it would be a lot line adjustment. It would be merged with the other with the larger parcel.
My understanding that because of this issue coming up in our efforts to resolve it, that you're going to bring this to us for approval in May.
Correct.
Okay. Are there any questions with respect to the Columbia Land Conservancy North Bay project? If not, the next item on the agenda is the Providence Hall and Schuyler Court financing. And again, I'll ask Chris to update us on that. You'll recall that K&R Development had come to the IDA last summer. The IDA approved the process of issuing tax exempt bonds. There were some issues at year end with a HUD promulgation that had not been finalized that resulted in a delay so that it did not close in 2023. In January 5th of 2024, the New York State Housing Finance Agency indicated that they were the only ones who could issue tax exempt bonds with respect to housing projects that were being renovated or going under rehab. And as a result, the structure of the deal changed, and they still need the IDA benefits. But Chris can explain where we are, as well as Melissa Bennett from Barclay Damon, who was brought in as special counsel when this was a tax exempt project, because we had not done a tax exempt project in a long time. So between Melissa and Chris, if you could update us where we are with K&R and how the new structure will impact the IDA.
Yep, I'll start and then we'll ask Melissa to jump in regarding the finance project and how that's going. So the board did previously have a public hearing and approve the financial assistance that we're providing. That is continuing. We have an updated application from the applicant confirming what they're doing, as Michael just described. And they still are planning to, do the renovation of the project and have the, continue to, they're still seeking the HUD Section 8 extensions so that they can continue to do what they were proposing to do and retain this project as low-income housing. What is going to be before the board today, and maybe I'll let Melissa talk about that, is I believe that we are still waiting for final details from the funding entity as to their bond structure, but we would not be issuing the bonds at this point, so we would be modifying the resolution just to reflect that. And Melissa, I'll let you continue.
All right, great. Thanks, Chris and Mike, and good morning, everyone. So as Mike, there we go. Thank you, Chris and Mike, and good morning, everyone. Sorry, I was on mute for a moment there. So as was discussed with the change in financing structure, where there will no longer be low-income housing tax credits for this project, and there will be no bonds associated with it. So the project is now in the midst of finalizing loans from their original lender, which is PNC and Freddie Mac, as well as the New York State Housing Finance Agency will also provide a loan to bridge the gap due to the changes in the HFA regulatory structure for the issuance of bonds. And so, as Chris mentioned, what's coming back to the board is, as those of you that were on the board last year may recall, there was initially a resolution that authorized the straight lease transaction, and then a second resolution that came and incorporated the bond financing pieces. And so this resolution is now reaffirming and reauthorizing and confirming authorization to go back to the standard straight lease structure for the documentation, and confirming the updates that the project company provided regarding the new anticipated schedule, now that the current expectation is to close the transaction in April here. And then the one new document that wasn't in the original approvals that we may need at this point is a separate regulatory agreement with respect to the restrictions on the income limitations and the rent amounts related to the project. So we'll monitor with the change in structure, whether that will be reflected in the other documents for closing, and if not, we will include those restrictions in a separate regulatory agreement. And so this, the resolution before you would also include authorizing that regulatory agreement. Are there any questions?
But I will just note that the terms of that for the IDA's financing were in the original IDA resolution. It stated the unit mix and the affordability requirements that were expected by the IDA.
Thanks.
Those are in an exhibit to the resolution. Okay.
Are there any questions? I think the one issue that we're not clear on is whether or not they anticipated April 30th or prior closing date. Will they need any further approvals from the IDA? And if so, we would need to have adequate notice to conduct a special meeting.
Mike, I don't anticipate needing to come back if they slip a little bit past the April date. Well, we can still do this resolution.
And our next meeting is the first Wednesday of May, which I believe is May 5th. Great. Well, this is very important because these 150 units are under Section 8 HUD contracts. And the HUD has been cooperative in extending those agreements. I know there's some issues with the potential going on and off the tax rolls, but if this had not come back to the table, the risk was that the current owner who wanted to sell would sell it to a for-profit developer who would take it market rate, and we'd have to find an alternative to find units for the people who are living there now. So this is a really important project.
I'm not very familiar with this, so can you hear me? The lease agreement document, that appears to be a sale. Am I correct? It talks about conveyance rather than.
In a ID structure, I'll let Melissa or Chris give that.
Yeah, so Margaret, the way that all of our IDA structures work, when we're providing financial assistance, IDA, in order to do that, has to have an interest in the property. And so it's formally a lease from the owner of the property and the lease back. So what you're seeing is the lease back with conditions, and the conditions are complete the project that you've represented that you will complete, make the project subject to the limitations, in this case, occupancy and rent limitations that are in the documentation. And then that is the vehicle, along with our uniform project agreement, our agent agreement that identifies the sales tax structure, and the pilot agreement that identifies the pilot structure. All of those are part of the set of agreements that we enter into in order to provide the financial assistance. Does that answer your question? It is a lease. It is a real property transaction. Unfortunately, that's the way we have to do it. Yeah.
The reality is we have to get title into the IDA to get the benefit of the tax exemption, and then it's leased back to the developer during the term of the benefits.
And this ensures that the property will remain Section 8, et cetera, right?
For the term, right, the term that's in the deal, right?
So I understand that the financing has changed for them. They no longer have the VITEC financing. We're still providing the pilot. That's
Pilot, the sales tax exemption on construction materials, and the mortgage recording tax, to the extent that a portion of the financing is not exempt because of HFA. And do we know the extent of the mortgage recording tax that we'll be providing, Melissa?
The amount requested is the same as what was previously requested, which is a not to exceed $200,000 amount for a $16 million mortgage.
16 million.
The exact, so you won't provide any that, and there may end up being less if the mortgage size is reduced.
Right,
So they need same benefits from us that they would have had we done the deal.
That's what I'm saying, we're really providing the same services and benefits that we had all along.
Correct,
Okay.
and for the financing, HFA is proposing to provide apparently a second mortgage instead of having them seek the low-income housing tax credit. And that mortgage would be exempt because they're a governmental entity, the mortgage to HFA. But the mortgage to the first lender would not be exempt, and that's where they're continuing to seek our mortgage tax exemption for that. Okay.
The benefits that the IDA is providing are the same as were approved previously. It's just there's a different structure that those benefits will be attached to.
Does KNR actually own the properties now? Has the sale actually gone through?
No,
No.
it'll be part of the overall financing of the.
That's what I thought, okay. So the current owners are still responsible for whatever payments, whether they be
Right.
pilot or,
That's
And
right.
we should keep that in mind at the closing, Chris, that there's going to be some reconciliation of taxes due in the time period of December 31st to,
well,
when did the pilot expire?
that is a good question. And I don't know why, but somebody reached out to me from that. So they make their payments. The way that the original pilot was structured is they make flat payments each quarter for each of the two properties, Schuyler Hall and Providence Hall. Then we do what we call a true up at the end of the year because the actual pilot agreement is a percentage of shelter rents. So once they've done their audit and determined what their shelter rents were for the year, they figure out how much they should have paid us, and it's generally always more. So they make a true up payment. So they did make that payment. They didn't make the first quarterly payment, and the second quarterly payment is now due. For some reason, somebody reached out to me on this topic, and I went back and I looked at the pilot agreement, and the pilot agreement said, so it was based on the, I gotta do my math right here, the 1982 tax roll. And one of the problems is, in general, is that people use tax roll and assessment roll interchangeably, and they're not the same thing. So I think it's the assessment roll. And it says, so 1982 assessment roll, pilot was not to exceed 40 years, which means it would have, 2023 would have been the first year that the pilot had expired. But it gets a little more complicated because it's actually no more than 40 years from when the final federal financing is complete. So I have no idea when that was, so I sent that information back to the, I think it's Arbor Management or the people that the original pilot, and said, you know, got this research and find out, you know, when your financing closed, because either it closed in 82 or 83, in which case this needs to go back on the tax roll, and you might get a prorated tax bill in 2025 for your 2024 tax that you should have been paying, or maybe the financing took another year or two and you're still under the pilot.
We gotta
So-
find that out.
So
Okay.
they're hopefully working on that.
And it would possibly make sense, based on when the HUD contract expired, if it has the language in about the federal financing contract.
And so when did that,
We'll have to find that out.
okay. Melissa or Chris, would that be something either of you would know by going through the current plan for financing with the new buyers of when the federal line financing stopped?
I don't know, but I'm happy to ask the question of KNR's counsel to see if they've got that information or can dig that up for us.
Okay, thank you. Like I said, I've asked Arbor Management as well, but
And I would guess, if that has expired and HUD hasn't given a formal, extension, how that might play into it if they have. Obviously, if the new HUD contract isn't put in place until they close on the financing, they have to have some documentation to preserve the benefit to the residents, I would think under the federal regulations. But we can look into that, find that gap period, if it exists.
yeah, it's complicated.
there any other questions on Providence Hall or Skylar Court? Finally, we have had a request.
I'm sorry, Mike, are you gonna, is the board gonna consider the resolution?
Oh, Mayor, the recommendation is for the board to consider the resolution, which was in the packet. Chris, could you just walk us through the resolution quickly? Or Melissa?
Yes.
Yeah, so.
Oh, go ahead, Melissa.
Yeah, I'm happy to walk through. So the resolution itself in the whereas clauses recites the history of receiving the application and the board's and the original request for the tax exempt debt, similar to the bond, which are essentially the bonds.
Yeah, it's very hard to hear.
Oh, is this better?
Melissa, can you speak up?
Yes, is this better?
Yeah.
Okay, the whereas clauses in the resolution walk through the history of the project, being the original application and the actions taken by the board last August and September with respect to authorizing the various pieces, and acknowledges that the company has submitted the update to the application with the new financing structure and reaffirming their requests for the financial assistance as we've just discussed. And it also recognizes that there may at this point be a need to enter into a separate regulatory agreement to document the affordability restrictions as the board has previously set out for the project. And so the resolution would authorize, ratify and reaffirm your prior approvals to grant the benefits and to enter into the various documentation, including the regulatory agreement. Is there a motion to approve?
I get a motion to approve the resolution. Second.
I'll second.
We need a roll call vote for this.
Yes, please.
Paul Johnson,
Aye.
Randall Martin,
Yes.
Margaret Morris,
Aye.
Heather Campbell.
Aye.
It passed all in favor.
Dominic is on.
Keep it.
Oh, he's not on.
No.
Right.
Oh, Charles, I'm sorry.
Hi.
I didn't know that.
Dominic's here but can't vote. So.
No, because he's not on.
Yeah, he's not.
Okay, well, that's good news. The other two items, we have had a indication from 620 Union, the Kin Street Hotel project, that they would like to present to the IDA board in May. And we also anticipate that the Crescent redevelopment project, which is on Warren Street, the old Ackerman building or Packard building, which we discussed last month, we anticipate they will be bringing a application forward. And we may have one other project, but I'm not sure where the planning board or zoning board of appeals is on 601 Union Street, the old Elks Club. So we'll have a busy meeting in May. That concludes my report, Mayor, unless there are any questions.
Any questions from the board? Thank you, Mike. Before we go to public comment, any additional items from the board?
One, Chris and I spoke about this briefly, so I think it's pocketbook factory. I meant to bring it with me and I didn't. So the property was put in the IDA's name. The tax bill arrived. Since it was the IDA's name, I assumed it was tax exempt, so I didn't open it until relatively recently because we were moving back and forth from the firehouse back to City Hall. I opened it and realized that even though it's in the IDA's name, it's not tax exempt, so it's a full tax bill. So I'm trying to figure out what we're supposed to do with that. So that's more of an FYI than anything. Not worked out there
Why
yet.
is this-
So
Well,
I,
hey, Chris, can we take a look at the documents, because, sometimes the documents describe when the pilot benefit kicks in. And in that case, if it is in the name of the IDA, they would just pay the full tax that was, that it was required before the project started, I would think. But we can do an
The problem
analysis.
is our pilots are different,
Yeah.
which is very frustrating because I don't know why they have to be different, why the pilot just can't kick in at the same point in time, whether it's post-construction or when they get their CO, whatever. But because they're different, it's,
I think the question is, to get some uniformity as it, so, and I mean.
So the structure of the
experience-
pilots, Michael, the structure of the pilots is not different. What happens is that these projects, the only difference is the date that they go of record, and that depends on when we close. So when we close, they are subject to the applicant is required to file the application with the assessor, and the assessor is supposed to place the projects in the IDA's name of record. And at that point, after the taxable status date, they will go on the roll as being exempt. Until then, they are subject to tax because that's the way the statute reads. They are, however, required to pay pilot in the amount of the full taxes until they reach their completion date when their pilot kicks in, right? So that is something that does require, some attention and monitoring at the beginning of each of these projects, because this taxable status date is what it is, right? We can't change that. But the
I think
deal.
the real issue is making sure, I know you disagree with me on this, but making sure that the project developer at the closing submits the whatever the documentation is to the assessor, because that's where we've had the problem, where there's been a delay.
I don't disagree with you. The documents require them to do that.
Right, but I think they should just hand it over at the meeting, at this closing, and we give it to the assessor, so we don't have the situation where we find out months later that they didn't. And then the assessor hasn't had the ability to have the notice but we can, discuss that going forward. I would just include it in the closing packet and they sign it and we turn it over. And even though it's their responsibility.
It is and it has been part of the closing packet, Michael, so I don't know. Pick up his.
I think on Pocketbook Factory, you told me that they had not submitted it in a timely fashion.
No, it was signed. It's a question of the timing of the assessor putting it on the rolls.
Yeah. Okay, well, I think what Heather's pointing out is, are all of our pilot scheduled benefit kick in at the same point in time, namely the issuance of a CO, or how is that structured?
Well, for the prior pilots, of course, they are what they are. For the newer pilots, I believe you've structured them so that they're kicking in based on their completion dates. And until then, they're paying full taxes. And what the pilot says is that there can be a half-year pilot structure, a partial year pilot structure, depending on when the completion date is.
But when the assessor puts it on the roll, that's just the public information aspect of it. Is there
no,
exemption?
that's what generates the tax bills.
Yeah.
So, I mean, basically the assessor does what the assessor does.
Right.
Then, in the city's case, for example, we get a file, we do what we need to do, and it looks at the assessed values of the properties, and it takes the mill rate, and that's how it determines what your tax bill is.
But there's a gap between when he puts it on the roll versus when it was closed.
Oh, there's many gaps. That's part of the problem too, because I'm not even sure how a half-year pilot would work, because you only issue tax bills at the beginning of the year for the whole year. So somehow we would have to write off the second half of the year.
No, it would be the school tax you know, if you're, let's say you have a completion date, you know, that occurs in June, right? The school tax that would normally be due, if that's gonna be zero, you're still gonna want a pilot payment for that, right? But we can, Heather, perhaps you and I and Michael can have a meeting about this, because I thought you had met with the assessor and sorted this out, but if there are still issues about the timing on each of these, then let's talk about that. I think we have to address the fact that the assessor didn't put one of these of record, and that needs to happen. I mean, it certainly needs to happen now on this roll, so.
But the applicant would only be responsible as of when, at the closing, when he
The
signed.
applicant's responsible for full taxes. Again, they're responsible for full taxes, whether that's in the form of a tax that gets paid in the normal course, if they're still on the roll, or for a pilot in the amount of the full tax.
Right.
If they, you know, if they haven't completed the project yet. So right, so those are things that there's a lot of technical review and documentation that needs to happen on these for sure, until they're, you know, kind of underway and complete and in sort of operating mode.
And just to make things slightly even more complicated, while the city and the county are on a fiscal calendar year, the school is on a calendar year that starts on July 1st, which means that the assessment roll is finalized in June. So the first tax bill that is influenced by the most recent assessment roll is a school tax bill.
Correct.
But the city and county tax bill doesn't use that assessment amount until 6 months later. So there's a lot of moving parts, and the assessments need to be
Cleaned up. This is why you come with change at a house closing, so that you can allocate the, how many days of taxes have been paid,
Right.
and how many are left to go before the next bill is due. Okay,
Yeah, maybe because we can even put like some sort of table together for each of the projects, and then maybe we could share that with the assessor, and maybe that would be.
why don't we do that and circulate it to Chris and to Heather
Oh, you want to do that? That'd be great.
from the documents?
Okay, thank you.
Okay.
That'd be awesome. Thank you so much. Stressing me out.
All right, I will open the floor for public comment. There are no public comment. Take a motion.
Only public.
And a second to adjourn.
So moved.
Second.
All in favor?
Aye.
Thanks, everyone.
Thank you, everyone.